So let me start off right away with this news here from the Treasury Department. What is your reaction to the idea that these programs are going to expire December 31st?
Well, I think our 13.3 facilities have been very helpful. They perform a backstop role for when markets find themselves in a more challenged situation, when Main Street lending could be impeded. The banks have been important for helping out. There's a lot of design put in place, and I think that backstop role might be important for quite some time, so it's disappointing.
What kind of risk do you see to the economy and to financial markets in their absence?
Well, the Fed is providing substantial support through our low interest rate policies. We're also buying assets at a $20 billion pace per month across the curve. The economy seems like it is, working through the virus that we've been facing for the entire year of 2020. The virus spread is increasing, and so there are risks from that. The markets seem to be functioning quite well, but I do worry about, we're moving into the indoor season. There are a whole bunch of sectors that have been challenged throughout the year: entertainment, travel, leisure, hospitality, even the ones that have learned how to produce in a safe environment like manufacturing. They face absenteeism, and when community spread increases, then absenteeism goes up. So there are a lot of challenges, and so there are risks. It would be good to have more support coming from all directions.
President Evans, people I've talked to about this issue say that the Federal Reserve will still have considerable lending authority, or lending ability, especially from the Exchange Stabilization Fund, which has $50 billion in it and can be leveraged up the way you have these other programs to almost $500 billion of lending. Of course, that requires the approval of the Treasury Secretary. What's wrong with that? Why isn't that serve as a backstop that the Fed can come in and provide this lending if it's needed with approval of the Treasury Secretary?
Well, I don't think there's anything wrong with that. I think that's a feature. That is an attribute. Now, it does require, working with Treasury, working with the Treasury Secretary. I think there's been a good working relationship, this entire year. And, during the transition, that's sort of, part of what this issue is. The, Exchange Stabilization Fund that you're talking about does have, capacity to be levered up for our programs to the scale that we're actually seeing, at the moment. So, you're right. That can be done. But I think actually keeping the programs in place, there's a lot of back office paperwork and infrastructure that needs to continue. That probably is at risk.
Shepard Smith here. Thanks for watching CNBC on YouTube.